It's Wednesday, January the 15th, and I'm David Song, currency analyst with Daily Effects, here to cover what we can look for in tomorrow's U.S. Consumer Price Index report. Of course, the headline reading for inflation, we're expected to see price growth uptick for the month of December to an annualized rate of 1.5%, which compares to the 1.2% print that we saw back in November. This would mark the first rise in price growth that we've seen since July, while the core rate of inflation widely expected to hold at an annualized 1.7% for the fourth consecutive month. But in fact, we did see a rather muted reaction to the Fed's beige book, where largely it looked as though most district banks were striking a rather neutral tone for the economy. However, with that in mind, we'll certainly look at some more U.S. data prints that we have on the docket. And of course, tomorrow at 8:30 a.m. Eastern, we'll also be watching the initial as well as continuing jobless claims. But guys, with this speculation that we might see the Federal Reserve become increasingly concerned about the risk for disinflation, we might have to be or closely watch this data print going forward. Might be a little bit more meaningful for us in terms of trade setup, with this growing concern, again, that disinflation might keep the Fed to retain its accommodative policy stance for longer than expected. But on that dynamic, guys, of course, it looks as though we're going to have to continue to watch the economic data prints coming out of this U.S. economy. And typically for trading U.S. event risk, I like to look at some of the most popular pairs, if you will, the most liquid pairs, such as the euro dollar, dollar yen. So let's take a look at the euro dollar, as I think it's at a very critical juncture at the moment. So guys, looking at the chart here, first thing, few bearish RSI divergence that I'm certainly taking note of here, and despite some of these recent attempts at 138, and it looks as though, again, might have a near-term top here, looks as though we're going to continue to respect that bearish trend from back in 2008. One thing I'm looking for here, guys, is, again, will this bearish divergence in the RSI continue to gather pace, and is that going to be suggestive of a larger decline that could essentially come about in the euro dollar over the near term? So right now, guys, some key levels to watch to the downside. So of course, we were threatening this 135.70, 135.80 region early on this week, but the larger key region that I'm watching to the downside is, are we going to make a more meaningful move at that 35 region? And if that becomes essentially the case here, we'll watch the RSI also look for both of them to move in tandem, and as a result might instill a very bearish outlook for the euro, not only even over the near term, but again for the longer term, as we do see that continue to respect the downward trend line dating all the way back to 2008. But with that, guys, we'll see how the data print comes about, and of course these inflation prints, as I mentioned before, might be growingly important for us traders down the line, especially as we do see the Federal Reserve start to normalize monetary policy and move away from its easing cycle. But with that said, guys, as always, stay prudent and good luck on your trades.